one thing that this reminds me of, this sort of chart, is, you know, back when the Bank of Japan was doing the same thing. They were trying to artificially basically water down the yen, and they were buying euros, and, you know, they had this floor, and, you know, the market broke through that no problem. So it's one of the reasons why I try not to spend a whole lot of time on, you know, these sorts of fundamental analyses, because these fundamentals can drive you crazy. I do know a little bit about Australia just because I live here, and so, you know, I hear a lot about the RBA, which is the Reserve Bank of Australia, of course, and things like that, but I really try and stay away from this stuff. Here's all I will say. I would side with the charts every single time. 10 out of 10 times. I'll go with what the chart shows rather than what, you know, the Swiss National Bank, which is saying, you know, we're not going to let it go past 1.20. Because if history is a guide, the central banks can't keep it where they want it forever. And, you know, the Bank of Japan is a great test case in that. You can see some of the most violent breaks on the yen, or, you know, euro yen, dollar yen, all those yen pairs. Those always occur once the market breaks through, you know, the so-called floor or whatever that the Bank of Japan set. So I just want to mention that right now. So based on what this chart says, you know, this chart to me is, you know, it's not saying buy. It's definitely not saying buy. It's more sort of wait and see. But I can see where some people, I mean, today, this is today's candle, right? Yeah. So today it looks like a kangaroo tail, but remember, today's an hour old. So we don't know what this candle is going to look like. I'll tell you what it looks like to me. It looks like a market getting ready to bust through the floor. I mean, again, it's wait and see. Today's a critical candle for this pair. But given that you have a bearish big shadow right on support, that's usually a breakout. And remember, we've already banged up against it once, twice. This is the third time we're here. So every time you hit a floor or a ceiling 3 or more times, the odds of breaking through are just multiply with every next touch. So yeah, to me, this looks like a market that's paused. You know, it's not sure, but it's getting ready for the floor to fall out. So it'd be really interesting to see what happens. I would definitely trade the chart. I mean, you know how I am, guys. I just trade the charts, and I would trade the chart, not the news. So just that's how I would. And again, to me, this chart says, okay, we're slamming up against the floor for the third time since November 13th, and guess what? Which is a month, basically. In the last month, we've hit it 3 times. And guess what? We printed a big bearish candle right on that one. So to me, this is a market that's in a holding pattern, but odds are it's a downside breakout. So that's how I see that one.